Welcome to The Explainer. Today we're going to decode the emotional roller coaster that is the stock market. You know, those predictable patterns that shape every boom and every bust.
Okay, let's dive right into this quote, because honestly, this single idea, it's the key to understanding everything else we're going to talk about. It tells us that behind all the fancy charts and the endless numbers, there's a very human story playing out, over and over and over again.
So, what is this predictable pattern? Well, it all comes down to a timeless dance. A tug-of-war, really, between two of the most powerful human emotions, especially when it comes to our money.
And here they are, fear and greed. This really lays it out perfectly. On one side, you've got fear. It makes investors totally panic, right? It drives prices way, way below what a company is actually worth. And then on the flip side, you've got greed. Greed pumps up that overconfidence, pushing prices to these crazy speculative levels that, they just can't last. The market is just constantly being pulled back and forth between these two extremes.
And here's the thing, these emotions don't just pop up randomly. No, they follow a surprisingly predictable sequence. It's called the market psychology cycle. And it really is a complete loop, taking us from the dizzying highs of euphoria all the way down to the absolute rock bottom of despair. And then, slowly but surely, it builds all the way back up again.
All right, let's break this down even further. We can actually organize this entire cycle into 4 pretty distinct, recognizable phases, and each one has its own unique emotional flavor.
Okay, so let's start at the absolute bottom. Phase 1, despair. I mean, the emoji says it all, right? This is the point of maximum pessimism. The headlines are just awful, the market's swinging wildly, and pretty much every person you talk to is convinced that stocks are a total scam. You'll hear them say, "That's it, I'm never investing again." But then, out of all that despair, this tiny little seed of hope starts to sprout. The panic begins to die down. Now, most people are still way too scared to even think about buying, but this is when the smart money, the patient investors, start to see incredible value. They start quietly buying up great assets at a massive discount.
And that little seed of hope, it eventually grows into broad optimism. Now, this is a really healthy phase. The market's making these nice, steady gains. Company earnings are improving, and more people are starting to feel confident enough to get back in. It finally feels like things are back to normal.
But optimism can get too hot. It can overheat and totally morph into phase 4, euphoria. And this, my friends, is the most dangerous phase of all. Gains go vertical, everybody gets hit with a massive case of FOMO, the fear of missing out, and you start hearing that classic, dangerous phrase, "This time is different." This is the very peak of the mountain, right before the big fall.
So what's really fascinating about all this is that you can actually see these phases playing out in the real world, if you just know where to look. The crowd leaves all these little clues about its mood.
Have you ever heard something like this? Maybe not your barber, but a taxi driver or your uncle who never talks about stocks is suddenly giving you a hot tip? It might seem like nothing, right? Just a funny conversation, but it is a classic textbook sign that the market is deep in that euphoria phase. Yeah, that's what we call retail participation, and it's just one tool you can use to read the room. You can also watch for things like magazine covers celebrating easy money, or a huge flood of companies going public in IPOs. Or maybe you notice that valuation metrics like PE ratios are hitting all-time highs. All of these are flashing red lights, signaling that greed has completely taken over from fear. So here's the really crucial point. The whole reason we're talking about this. Once you can identify which phase the market is in, you can actually position your own strategy to counter the crowd's emotion instead of just getting swept away with everyone else. Okay, so think about the despair phase. Everyone else is panic selling, right? Well, a contrarian strategy says you do the exact opposite. You go on the offensive. This is the time for maximum aggression, loading up on high-quality stocks that are basically on a clearance sale.
Then, as we move into the hope phase, you keep accumulating. The worst is probably over, but you stay confident yet cautious. Why? Because the recovery is still pretty fragile, and it's definitely not obvious to most people yet.
Now, as optimism takes hold and the market's doing really well, hey, enjoy the ride. But this is also when you start to wisely and prudently trim some of your biggest winners. You're selling a little bit into that strength and building up a bit more of a cash buffer. And finally, we get to euphoria. The crowd is popping champagne, everyone feels like a genius, like they're invincible. This is when the contrarian is at maximum caution. You're systematically taking profits off the table and building a really significant cash position, getting ready for that inevitable downturn you know is coming. All right, let's put that all together into one single simple framework. As you can see right here, each phase, from despair all the way to euphoria, has a matching crowd mindset. And the contrarian strategy? It's simply to take the opposite action. This table is basically your roadmap. You apply maximum aggression when the crowd is panicking, and you switch to maximum caution when the crowd gets greedy. It's that straightforward.
But, and this is a big but, here's the hardest part of all. This isn't just about mastering the market. The real challenge is mastering yourself.
Because your own emotions, they're going to naturally want to align with the crowd. During a market crash, every single instinct in your body is going to be screaming at you to sell, to get out. And during a crazy bull market, you're going to feel like a financial genius, and you'll be tempted to take on more and more risk. The brutal reality is that the right move is often the exact opposite of what feels right in the moment.
So the key takeaway, really, is to build a system based on principles just like these. This system is what protects you from your own worst emotional instincts. It's what forces you to remember that while markets go in cycles, human nature doesn't change. It reminds you that the absolute best opportunities often look like total disasters, and that cash is your ammunition to deploy when everyone else is panicking.
And that leaves us with one final thought to really reflect on. When you look at your own financial decisions today, right now, can you identify the emotion that's driving them? Are you acting out of hope, or maybe greed, or fear? Because understanding that, well, that is the very first step to mastering this cycle, instead of just being mastered by it.